All right, so we're gonna go ahead and talk about the bear market. Okay, so pretty much whenever cryptocurrency starts heading in a downtrend, okay, sometimes that's gonna induce panicking. Okay, it can induce a couple of emotions, such as like panic selling. Okay, certain things, whether you want to feel like you might want to dump your entire portfolio, okay, because of how many negative trades that you've taken within a certain bear market cycle, right? Or if your portfolio's down, okay, but we don't want to do that, okay? Let's not think of the market that way. Let's think of the market logically, okay? So just like we always cover and talk about, there's benefits to making sure that these markets go in upwards direction. Okay, cryptocurrency included. This is something that governments hold, many people hold, hedge funds hold, and just people with large quantities of money hold. Okay, so cryptocurrency, it's not going to be something that's going to be useless. Okay, it's going to be something that's going to be instructing and providing power back to us, the people. Okay, so it's something that people are investing into due to the fact that people can easily send money from one person to the other, okay, without having any bank intermediaries in the middle of it. Okay, so if you want to send a wire transfer, for example, okay, from $1 million from one person to another person in China, a lot of times that transaction might not easily go through, okay, without being first approved by the bank. Cryptocurrency removes the whole bank in the middle, okay, and works on its whole blockchain system, okay, letting people make their transactions on their own accord. So if someone wants to sell $1 million in cryptocurrency to a person in China, they can go ahead and do that and easily and instantly using the decentralized space. Okay, so let's go and let's jump into it. So cryptocurrency has many uses. If you see market going in a downtrend, all it is people selling as well too. Okay, just like we see this chart right here. Okay, this is a left to right chart. So if people got in at this low down here, okay, and market starts going in upwards direction, of course, when market decides to fall down and correct, okay, people call it a bear market, but of course it's going to fall down and correct though. People got in way back here and they're going to go ahead and take profit. So when people are taking profit, getting their money out, that's going to cause the shares to fall down. Okay, so all the crypto supply will fall in a downwards direction the more people sell. Okay, so whenever we see market going in a downwards direction or a bear market, okay, that just means markets going in a downwards direction, which also means people are just selling. Okay, but these are going to be opportunities where markets also going to go on discount. Okay, so if something is $50 right now, okay, and it's something that you want, and then it goes on sale, and you see it on sale for $20, okay, you might even get two of those things, okay, due to the fact that it's on sale now. Okay, so think of crypto market dumps like that. Okay, think of things going on sale. Okay, market has to go up in order to come down. It can't just go up in a straight line forever. Okay, it has to work in a staircase formation. People have to buy, people have to sell. Hence why it's called trading. Okay, when you're winning, somebody's losing. When you're losing, somebody's winning. Okay, so let's cover the mindset and really just understand how we can prepare for when market's going into downtrends. Okay, so let's define the bear market and root causes. So bear market is generally defined as a decline of 20% or more, okay, from the recent highs, marked by widespread pessimism, low confidence, and a sustained decline in prices and trading volume. Okay, and key definitions. So the 20% rule. So why subjective? A 20% drop from the all-time highs signals market distress. And in crypto, drops of 70 to 85% on certain things like meme coins and stuff like that can be common during major bear cycles. So that's why you don't really play meme coins and things like that. It's not really worth it since they just don't have enough value. Okay, and they can easily just go ahead and fall in opposite directions without much of a backbone behind it. Okay, versus something like Bitcoin, where that's a lot less likely to happen. And the more actually it dips, the more people are going to buy. Okay, people are putting in $300 million orders plus, etc. Okay, anytime Bitcoin dips down. Okay, so it's way different. So it's going to be sometimes too where certain cryptos go cold, okay, and they start consolidating. So what consolidating means that it starts going in a sideways direction. Okay, not much price action up or down, and you want to stay away from those. Okay, so you want to trade something that goes in upwards direction year after year and is getting percentage year gain, okay, making your money more money, making it a stable investment. So watch what cryptos we invest in. Okay, and primary catalyst, right? Let's talk about it. So some macroeconomic factors. So global inflation that can affect crypto prices, interest rate hikes by central banks, and traditional asset market declines often correlate with crypto downturns. Okay. Excessive leverage cleansing. Okay. Overly aggressive market buying. Okay. With borrowed funds. So there's going to be times where people can trade Bitcoin with borrowed funds, right? With something called leverage. So just like, futures, there's going to be things called crypto futures. Okay. And on crypto futures, you can trade with the same leveraged amount. Okay. And any leverage amount, depending on the broker, goes up to like 500x and stuff like that. Okay. And sometimes when market decides to go down, okay, it creates instability. And bear markets, meaning markets going in a downwards direction, it purifies the market by liquidating these highly leveraged positions. Since the more leverage that you're playing with, the smaller that your stop loss is going to be. Okay, meaning that your trade has to close at a certain area automatically versus if you're playing with no leverage. Okay. So regulatory uncertainty. So major government crackdowns or unclear legal frameworks in key jurisdiction can trigger broad market fear and lack of trust within certain cryptocurrency markets. Okay, so we saw in 2022 COVID area during the SEC, okay, the government exchange for securities, okay, they were having some problems with the crypto sphere, but since then things have been passed, things have been regulated, and as we can see, crypto is now shooting into new highs constantly with tons of optimistic future ahead of it. Okay, and let's talk about project failure and exploits. So the collapse of large projects like major stablecoins or exchanges lead to contagion and a severe loss of investor trust. Okay, so if you see certain things like certain exchanges fall down or certain brokers where a lot of people invest in just shut down randomly, that could put some fear into the market. More fear into the market, less people are going to be investing. Okay, but that's just things that could happen. But just like a bank, banks have random maintenance where you can't pull out your money. Okay, so anything has its cons, anything has its pros. Okay, only thing's perfect is God. Sometimes things are going to shut down, just is what it is. So psychological game, right? Conquering FUD. So investment success during a bear market is going to be 80% psychology. Okay, really 80%. I'll say like 90% plus. Okay, because you can have really the best levels on the screen. Okay, and I've done some tests with certain students. Okay, you can give somebody the best levels, but they don't close where they need to close. Okay, due to the fact that their analogy or how they process it in their head might be completely different. Okay, so trading is really going to be psychology and how you look at the market. Okay, so mistake number one. Okay, so mistake number one that people make, this is the main reason why people will remain unprofitable. Okay, their stop losses are going to be too tight. Okay, way too tight. Okay, causing them to panic sell. Okay, so selling assets at low prices locks in permanent losses. And the single best way to lose money in a bear market is to sell everything when despair is the highest. Okay, sometimes you got to sit and you got to hold through certain periods expecting price to sweep up. Now, I'm not saying hold every single trade, just certain past the worst dump of all time or past your stop loss. But if you have a calculated trade that you have planned and it starts going in the red, it's part of the game. Okay, and the game is really about who can survive when market's in drawdown or your account is in drawdown. Okay, and who can't. Okay, because whoever's going to sell all the positions when market's in drawdown for a loss, their account is never going to grow. Okay, you have to be able to sit there and stomach through it. There's times I've had tons of time. This is why time is going to be one of the biggest factors in trading. This is why crypto is really amazing. Okay, when you're trading cryptocurrency, you have time. Okay, cryptocurrency, as soon as you buy, you can hold it forever until the end of time. So you have time. So if you sell, okay, that's going to be on you. Okay, there's no time running behind you. As soon as you buy some spot cryptocurrency, okay, when you just buy crypto on a normal broker, okay, and you can just buy and hold without any leverage, okay, and no leverage buying cryptocurrency, just being the normal way, it's called spot. So when you do that, okay, you can decide like, okay, I'm going to sell in a couple of years. Okay, it's not as easy to do that with other instruments. Okay, other instruments can be time gated, such as like futures, for example. Okay, futures, each contracts, they have expiration dates. Okay, so things can be a little bit different. So let's talk about tactic number one, right? The zoom out. Okay, we got to zoom out. We got to get the whole long-term perspective. This is why we use our higher time frames. Okay, time frames we're going to be using. Okay, some great notes here. Time frames that we focus on. Weekly. Okay, we're going to use our weekly time frame. We want to see everything on the larger, higher time frame scale. Okay, after we check out our weekly, maybe for take profits. Okay, and take profit is where we close the trade out. Okay, say you got it at an area of support. Okay, and you close at an area of resistance above current price, you can go ahead and do that. Okay, so you're gonna have the weekly, you're gonna have the daily. Okay, and then you're gonna have your 4-hour time frame. Okay, then you're gonna have your 4-hour time frame. Okay, so using those time frames all together is really going to help you put your trade into perspective and be like, okay, this is the type of setup I want to be taking from now on. Okay, and these are the type of trades that I just take. Okay, so that's what you want to focus on. Okay, weekly, daily, and the 4-hour. So let's talk about zooming out. So the HODL view. So we're going to focus on the long-term vision, okay, of 3 to 5 years plus. And all major crypto bear markets have been followed by new explosive bull market cycles. Okay, look at the monthly or the yearly charts. Okay, not the 5-minute charts. Okay, tactic number 2. Okay, reduce obsession. Okay, we should be grinding in real life, stacking up some bread. Okay, putting some money away. Okay, and just growing our capital in the real life so we have more money to come put into the markets. Okay, but constantly checking P&L, seeing how much money you're up and down. It's not what we want to do. Okay, focus on the charts. Okay, you could look at the charts, see where it's at, but even that, don't turn it into unhealthy obsession. Okay, take your time, check your charts out maybe once a day, a couple times a week. Okay, but don't sit there stuck on the position every minute. Okay, constantly checking the price feeds lead to anxiety and they lead to impulsive behavior. So set clear rules and limits and then step away from the daily chart fluctuations. So it's really about a battle of just you versus you at a certain point. So quote for perspective, right? Be fearful when others are greedy and greedy when others are fearful. Okay, so when everyone is scared, price is going in downwards direction. As soon as it starts making a curl on your weekly or daily, you can go ahead and get in, buy that, and then you buy the low where everyone's fearful. And then by the time it's at all-time highs, that's when you're going to start seeing the post like, oh, everyone, and then everyone's going to start buying at all-time highs. Okay, it happens constantly every single cycle. So when we know how to sit through the bear market cycles and buy certain dips, we're going to be able to prepare and be a lot further ahead than other people due to the fact that we can analyze something so simple. Okay. So accumulation through DCA. So let's talk about DCA. So DCA stands for dollar cost averaging. Okay. So DCA, it's dollar cost averaging. What is that? Okay, it's one of the most powerful tools for risk mitigation and capital deployment in volatile bear markets. And it needs the need to time the bottom. Okay, and let's talk about the DCA mechanism. So fixed schedule. So investing a fixed dollar amount, let's say for example $100. Okay, at regular intervals, let's say weekly or monthly. Okay, that's going to be DCA. Okay, when you're just regularly putting away a certain amount of money. Okay, that you can. Okay, pay your bills, get some groceries, and then you can invest. If we're going to say you're going to invest $1,000 in Bitcoin a month, okay, then go ahead and do that. Okay, if you can do more, then do more. But DCA means just take a percentage of your money, okay, break it down and put it into some cryptocurrency or whatever investment. Okay, I don't care if you get $10. Okay, go ahead and break it down, put 7 of it into crypto. Okay, just having that type of stack mode mindset is going to help you grow your currency and help you stack way faster. Okay, and your portfolio will flip in no time. Inshallah. So reducing the timing risk. So, and also keep yourself broke. Okay, so if you keep yourself broke, it's a strategy I notice a lot of people do. Okay, it's something I definitely do. Okay, I don't keep any money in my checking account. Okay, after I pay my bills, I get my big lump of groceries. Okay, I do what I need to do. Okay, I buy what I want to buy. And then from there, every dollar that I have the rest, okay, I'm going to pay my credit card. Okay, and then after that, I'm just going to invest. That's all I do. I put every single dollar into investments and I just keep myself broke. Okay, I paid my rent. I got groceries, so I'm not going to starve, thank God. Okay, and I did everything I need to do. So I'm good. So I can keep myself broke and I'm going to survive. Okay, so keeping yourself broke, whole time you got money stacked away in investments, is going to be a really good thing to do. Okay, just changing the whole mindset. Just, you know what? I don't need to go get this coffee today. I'm going to bring some coffee from home. I'm going to take this money and I'm going to invest. Okay, so it's something personally my wife really helped me out with. Okay, just changing the whole mindset of everything. Okay, changing the whole mindset of everything and really understanding like, okay, you know what, let's not eat out today. Let's stay down, groceries, and the rest of this money is investment money. Okay, because this stuff, it adds up quick. It's easy to spend $40 on a DoorDash meal, $50 on a DoorDash meal for 2 people. Okay, quickly. Okay, but $50 worth of groceries, it really goes a long way. Okay, so it goes a much further way. Okay, so it's about just staying down, making the right decisions, and then we can go ahead and ball later. Yeah. So the compounding effect, right? So this strategy becomes exponentially more effective when asset prices are depressed. Okay, as your fixed investment buys a larger portion of the supply. Okay, so when market is in a downtrend, okay, and market's about to make that curl in the upwards direction, okay, and then we have cash to just stack and throw in there, and you buy, okay, even if you don't have all the cash in the world to buy at the low, as it curls up, you can keep adding, okay, and that you hit your trade, okay, and it's just about mindset. Then from there, take that capital, and then you can go ahead and deploy more cash into there and just keep stacking your wins over time. Nice. So thriving the strategy. All right, so let's talk about some fundamentals there. So bear markets separate speculative noise from real technology. Okay, so this is the time to ignore hype, okay, and focus exclusively on fundamental analysis and your technical analysis. Okay, so when market's in a heavy downtrend, let's say there's a speech from a president or something like that that has dropped the market, okay, we want to be looking once again on our weekly and daily time frames primarily. Okay, and we're going to be looking for that V curl up. Okay, we want market to make an area of support. Okay, and then we want to see market start to curl up, either after a couple of days from the daily or a couple of weeks from the weekly. Preferably, weekly curls are going to be really nice. Okay, because that means price really wants to reverse. Okay, if you start seeing 2 weeks in a row, price action, price filling in the V. Okay, a lot of the times that's going to be the setup you would like to take. Okay. So, and we're going to ask ourselves too, if something is going down, why is it going down? Okay, was there any bad news behind it? Okay, did something happen? Okay, and let's think about utilities and use cases. So does the token or protocol solve a genuine, tangible problem? So we'll talk about Solana, for example. Okay, Solana, you need it to trade meme coins. Okay, so that point alone, Solana has value. Okay, if people want to create their own cryptocurrency coin, okay, they gotta generate some Solana first if they want to make their own meme coin. Okay, but then we'll take something like a random meme coin that's just a joke. Okay, it doesn't have any community behind it, no nothing. Okay, just a random meme coin. If it goes down to zero, okay, a lot of people wouldn't be surprised. Okay, because does it solve any genuine, tangible problems? But then you're gonna have something like Ethereum, for example. And Ethereum was created due to the fact that Bitcoin is limited. Okay, so one day Bitcoin will be gone. So people still want to trade cryptocurrency, so that Ethereum was created. Okay, so Ethereum has its purpose there. And instead of using power to create it, like Bitcoin's using power to create it, Ethereum is created using computers and smart contracts. So it's a lot more power efficient for the earth and it's healthier. Yeah, so Ethereum actually has real uses compared to certain other things like random just joke meme coins. Okay. So, because if something has a real use and it dips down, people are going to be hounding to buy that dip. Okay, the second something valuable dips, people are hounding, buying tons of it. Okay, the second Bitcoin dips, people putting in hundreds of millions of dollars worth of orders, whether it be governments, BlackRock, any type of companies, anybody. Okay. So, talk about the cryptocurrencies team. So is the development team public, experienced, and actively building during the bear market? Okay, and you could check certain GitHub commits too. So certain cryptocurrency coins, okay, even though they're dipping down, they're working on tons of stuff on the back end, okay, looking to progress the future for. And the community and governance behind it. So does the project have a vibrant, resilient community and a clear decentralized government model? Okay, so just like Bitcoin has tons of community behind it. You got companies such as MicroStrategy, also known as MSTR, okay, big representative of Bitcoin, okay, things like that, okay, and also have, once again, governments, US government, other governments, etc., participating in buying Bitcoin and other tokens as well too. So the tokenomics of everything, okay, so analyze the supply schedule. vesting periods, inflation and deflation mechanics, and allocation of the team versus the public. Okay, and blue chip versus speculative asset, right? So blue chip cryptocurrencies, they're going to be our big heavy hitters. Okay, our Bitcoins, our Ethereums, XRPs, etc. Okay, and these assets, they have the deepest liquidity. Okay, and liquidity is going to equal money. Okay, and money equals the amount of people. Okay, the more money something has, the more people are trading it. The more people are trading it, the higher liquidity it has. Okay, so liquidity is going to mean money. So they have the highest and deepest liquidity and have proven recovery patterns over multiple cycles. For example, Bitcoin's 80% drop in 2018, followed by a new all-time highs. Okay, so people, once again, if something's a valuable resource and it dips down, people are going to be hounding and fiending and hungry to buy the dips, because I know I definitely am. Okay, I just bought some Bitcoin today. Okay, so speculative meme coins. So assets with high returns during the bull run are often the first to lose all liquidity in a bear market, okay, making them highly dangerous accumulation targets. So focus on protocols with established ecosystems. Okay, for example, layer 1 networks and major DeFi apps. Okay, so let's get assets with high returns. Okay, during the bull run, the first to lose all liquidity in a bear market. Okay, so focus on protocols with established ecosystems, things that have been around for a couple of years, okay, and has some value. Something you can sleep on your investment. So that's one thing we want to think about in trading, you know? So sometimes we hop on the markets, we think about money. You know, that's the right mindset. We're trying to run up a bag, but sometimes we got to play it safe. So the safest trades, a lot of the times, what people don't know, the safest trades, a lot of the times, is what's going to make you the money. Okay, focusing on discipline, being as safe as you possibly can with your money inside of your account. A lot of the times that'll lead you to running up that big bag. Okay. So people are going to claim that market's going into a bear market when all it's doing is going in a downwards direction. Okay. It's people who think that market's going to run up infinitely, going up forever. It's extremely unreasonable. Okay. Market's going to obviously fall down, correct, even if it's a hard correction. You have to understand that there's people who've been invested in years, months, and many more days before you even thought about it or even got in. Okay, so we have to think about those players and how long they've been waiting to close. Okay, so that's why quote unquote bear markets happen. Okay, markets just selling off due to the fact that there's too much supply. Okay, people who got in way in the beginning of time are holding so much of it, they're like, all right, I'm going to take my money and do something with it. Okay, and hence, and then a succession of everyone doing it at the same time, okay, leads to a bear market, leading price to go in a downwards direction. So staking, okay. So we'll talk about this in a second, but understand that the goal is really to increase your total asset count while the prices are low. So this is why I really promote the V, okay? So market, it's gonna fall by itself, okay? Market's gonna do its thing, and the left side of the V is gonna be market falling. Now, once market makes a bottom of the V is when we wanna look for a setup, okay? Look on the weekly or the daily, look for the bottom of the V, and then catch the rest of the V gap fill. Okay, that's what you're going to be looking for. Okay, catching the rest of the V gap fill. So you want to buy something at a low ideally and catch a sweep up. Okay, buy something at a low and catch a sweep up. Okay, because if you buy something a lot of the times, okay, especially if you like an options trade, if you buy something at super all-time highs, okay, you can expect to get pulled back on. Okay, but understand that, yeah, certain positioning, it really does matter, okay? Especially if you're gonna buy certain things that you're not expecting to hold for years and years, especially if you're trading something like leverage crypto, okay? Then we want to go ahead and think about that. Okay, so yield farming, okay? So providing liquidity to decentralized exchanges to earn trading fees and governance token, okay? So that's going to be one of the things that some people do too, okay? And that's going to be something that's just involved, but we don't really have to worry about that, okay? As well as staking and then stablecoin allocation too, allows you to earn low risk, low yield while maintaining purchasing power for potential market dips, okay? So there's going to be certain things you can do. Yield farming, you can pretty much kind of like the bank, get APYs, annual percentage yields on your money, okay, if you invest in a certain cryptocurrencies. Okay, so you can do that. That's a potential option. I don't really recommend that. Buying spot or just buying normally in a normal broker is going to be just a lot safer too. Okay, because certain of these yield farm coins can go down and then you're not going to get certain of your returns that you expect back. But some of them do provide nasty returns like 40% per year and things like that, okay, on your money. So yeah, that's some things in the cryptocurrency space. So, so okay, and then but market will always recover. So even if market decides to go in a downtrend, okay, if something's a valuable asset, it's putting a smile on people's faces. Inshallah, if God wills, it'll hit a sweep back up. Okay, so following every 70%, right, major drawdown in Bitcoin, for example, people were thinking, oh, it's the end of the coin, it's the end, like it's over. And Bitcoin has not only recovered, but has gone on to achieve significantly higher all-time highs every single time. Okay, and the bear market is not the end. It's simply just the consolidation phase where people are just getting a opportunity to buy in. Okay, so it's just an opportunity. So bear markets are an opportunity. Hence why a large amount of millionaires were made in the 2008 recession, for example. Okay, how were millionaires getting made in one of the worst times for people? Okay, but it was really just the worst time for people who weren't investing. Okay, if you were investing during that time, you would have been able to make some really, really, really great money. So yeah. So this is why we take advantage of any dips now. Okay, any dips, we're gonna go ahead and buy the lows, and then you can catch the whole sweep back up. So the bear market, it's just not the end. Okay, it's not the end, especially if something is valuable. Inshallah, you could expect to sweep up. So essential risk management and security. Okay, so self custody is key. So let's talk about some crypto things right now. So let's talk about keeping our crypto safe. Okay, so keeping your crypto safe is gonna regard in a couple of things. So if you keep your crypto in a broker like Cash App or Coinbase, Kraken, or things like that, okay, they're safe. But if these brokers happen to shut down, then you lose access to your cryptocurrency, okay, or something like that. Okay, so you're not gonna have access to certain things. Okay, so what you can do eventually, okay, you can keep it on a broker like these for now as you stack up, but I advise once you get past like 4 figures to the 5 figures range, then go ahead and move and start. You can still buy on these exchanges, is what they're still useful for, but after that I recommend moving your coins to what's called a cold wallet. Okay, so you could either use it's going to be a hardware wallet where you can actually physically plug it into a computer and then you can get access to your crypto. So those can be destroyed. That's the only bad thing about that. So again, we talked about certain things like the guy clearing the landfill, okay, looking for his cryptocurrency. Okay, so things like that are going to come into play. So you can actually just use a seed phrase. There's going to be certain things like Phantom, okay, Phantom on the Apple App Store. It's really, really good. It's just going to be like a ghost icon, okay, with like some eyes. And there it's going to be backed up by a seed phrase. And the seed phrase is going to be a 12 to 24 word seed phrase. And you can go ahead and just either write it down on pieces of paper, email it to yourself with a secure key, and just keep the code, spread it out somewhere. Okay. So you can do things like that. So cool. So now we're gonna be good. Okay, so we're gonna focus on bear markets and we're gonna be waiting for curls. Okay, we're not gonna think of bear markets as bad. We're gonna eyeball them. We're gonna see opportunity in that. Okay, we're gonna see the good in it. All right. So cool. So that's gonna go ahead and be that.